Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Here we are with another episode of Black and White Market Chatter on Life Planning 101. Matt Ervin and Aaron Kennedy back at it for the new year. Nothing short of exciting going on in the markets. Aaron, tell us what your take is.
Man, everything's exciting this year. Happy New Year's to everybody.
Yes.
I know we didn't get with you last year.
Last week.
Yeah, the last week of last year.
Yeah.
And I apologize. We haven't given up on anything. It's just...
We're not hiding.
Yes. Just a bad week. Anyways, fantastic year so far. NASDAQ's up over 5%, 5.2 to be exact. S&P 500's up over 4. Yep. And if we go to more quality, like the Dividend Aristocrats, that's up 3.5%. So what a fantastic start to the year. Yeah. Oh, it feels good.
Yeah. It's nice to see a little green on the screen.
Yes. I think they said NASDAQ was up 5 days in a row, and that's the first time in a long time that's happened. So a little bit of optimism out there. I thought today was going to be pretty rough. Banks came out this morning, and the market did not like it at all, and the market was pretty negative before I got into work. And, of course, bad news is good news, so by the time I got my first cup of coffee, the market was flat again. But, what the bank said was, things aren't as good as we thought, but we're still making good money. So other than Wells Fargo, the big majors, they're beating on revenue. They're beating on earnings. They're performing. The deals that they typically work through are not there right now, so that's the bad part. People aren't taking out mortgages at a 6.5% mortgage, so that's slowed down. Other interest-sensitive investments are just slowing down because nobody wants to pay that interest.
Well, even we've seen some clients with some deals that kind of got tabled for now. Yeah. Right? I mean, it makes sense. If I could have paid 3 a year ago and now I'm paying 6, it might make sense to breathe just a second because rates will come down.
Rates will come back down. But the banks are making good money on their interest rate spreads. Everything's working appropriately. And this is nothing like 2008 where banks were so over-levered that we're at a big risk of losing everything in the economy.
Right.
Those days are past. Banks are much safer today compared to where they were 12 years ago or 15 years ago. So everything's working out well. Negatives was Jamie Dimon came out and said everything's slowing down, recession is coming. I like Jamie Dimon. He's usually pretty informative, but hey, he's not on any pedestal, and him saying a recession is coming is not new news.
No, and they've been saying it. And to your point, you don't know you're in one until after you're out of one, right? So we're going to see that come back. But there's been a lot of people talking about that, and there's a lot of people or a lot of companies laying off people because this big recession's coming. But for every argument you hear that we're going to have some traumatic event in 23, you hear one that says, well, it's going to be a little bit volatile, but maybe it won't be that bad. So, anyways, just keep your eyes open, right, and stay sharp. So don't take anybody for gospel at this point.
That's perfect. That's what makes a good investor. It won't be that bad. And on the flip side is you got to be able to say that ain't going to be that good.
Right.
As long as we can keep our emotions in check, you can do very well. But just don't get too upset one way or the other.
Well, and I heard something this morning. It was, and I'll try to make this quick, but it was very good perspective. It said, in our thinking, we need to extend our duration. Right, you can tell a lot about a person by the timeline that they speak in. What are the returns this week? What are they next week? Versus, hey, what are the returns need to be over the next 5 years for my company to develop? What is 10 years? What is the next economic cycle? So really, don't forget why we're in this. We're in this for the long haul. We're just trying to keep everybody informed on the weekly.
Yeah, I don't think anybody said it any better ever. I love it.
Well, it wasn't me, but I'll try to find the quote for you.
So we're wrapping up right now. Earnings are coming through, like we say. Expectations is the S&P 500 is going to have something like $220 a share. Mm-hmm. And more than likely it's coming down next year. And it's all over the place, guys. I've seen earnings estimates of 160 all the way up to 225. So I don't want anybody to worry and lose sleep over earnings estimates. Number one, it's just a guess. Right. But we can make money in the market 3 different ways. Number one is dividends. Company pays out a dividend, puts it in my pocket, that's me making money. A company can increase earnings. If the company earns more money, hopefully stock prices increases, goes in my pocket, I can make money that way. Third way is by multiple expansion. And that's the most confusing part, and that's the one that makes projecting so difficult. So an earnings multiple. If you hear multiple, you hear PE, you hear any of that stuff, just think of it. If a company is earning $10 a share, and that multiple is 10, or it's trading at a PE of 10, that means the stock's $100. If the PE is 20, or the multiple is 20, that means the stock is 200. So the company earned the same amount of money. It's just depending on what people are willing to pay for that dollar of earnings.
Okay, so people are buying or selling based on the price they're willing to pay for the earnings, not the price of the actual stock.
Yes.
Okay, so we've got, you get paid by a dividend, you get paid by your stock appreciation, and then you get paid
earnings of the company.
And then you're paid by people buying and selling, right? Buy and sells.
Yeah. Price
fluctuation on what they're willing to pay for those earnings.
Yes. And that multiple, it's a popularity contest. Think about being in high school and seeing who is getting elected to class president. Right. A lot of the times, it's the smartest person, or, it's somebody heavily involved and they like the academic side. But more than likely you're not class president because you're going to end up as a CEO of a company. It's not always the best person for the job. Right. It's a popularity contest. And that's a lot of what the multiple is. It's just, what are we expecting in the future? If a company's growing real big, maybe the PE's a little bit higher.
Right.
So keep that in mind. So think about this. If I have a company that earned $10 in 2022, and earnings are going to take a bath, and that company's going to have earnings go down by 20%. But my multiple expands from 10 to 20. So that's a lot of moving parts. Earnings decrease by 20%, multiple doubles. So and we're starting at $10 or 10 PE. So I got $10 of earnings. The PE's 10, that's a $100 stock. If earnings drop 20%, so now I got $8 in earnings. If my PE stays the same, my stock should be worth 80. Right? Okay. It should drop the same amount of earnings. But what happens if my multiple goes up to 20?
And they're willing to pay twice as much for the $8.
Yeah.
So then you're at 160.
Then I'm at 160. I actually made money in a company that decreased in earnings. Why? Because it's the most popular thing out. It's very popular. People are willing to pay for that.
And that goes back to the momentum. What are people buying,
yes.
right? And what factors are people chasing? So there's a lot that goes into it. Aaron, based on what you're saying, I don't know if you ever Mr. Popular with the class contest there, but
can you tell I didn't make class president?
I don't know if they ever voted you in, but you do a heck of a job of explaining how multiples, so that works. But hey, we're getting a little long, so what else to wrap up this week? We just want to take care of you guys, but what else kind of final comments you want to share for the week?
Man, we're having lots of conversation on getting your cash to work. If you got money at the bank and you're not getting any interest, go have a conversation. Right now you can get 1 month treasuries or CDs somewhere in the 3.9%. So you should probably be expecting a 4% savings rate. And you need to go ask. Lots of banks out there are not giving that because they don't have to until you ask.
Right.
And more than likely they will give it to you. Because think about this. The banks have a reserve requirement of about 10% right now. So that means every loan that they have out there, they have to have 10% of their capital. Or another way to say this is if you have $100,000 in your savings account at the bank can go out and lend $1 million. So let's pretend that the bank lends out $1 million and they're charging 7%. Mm-hmm. What's that bank making?
$70,000.
$70,000 off of your $100,000. So why shouldn't you be able to go to the bank and say, hey, I at least want market interest rates, which is at 4%. So that bank should pay you $4,000 on your savings. And if you go in there and ask them, they'd much rather give you the $4,000 than give up the $70,000.
That's right.
So you have some negotiating power. So if you go in there, tell them, hey, our advisor can get market CDs at 4%. Yeah. Why not?
Yeah, brokered CD. And if they won't give it to you, we can try to help you find something.
Yeah,
there's
we can
lots of stuff out there. So, Aaron, I hate to shut you down there, but basically, if you get your cash working, if they won't do it for you, give us a call. We can talk you through the best way. There's so many different ways to do that. So,
yes.
But today we're going to get wrapped up right here on the Black and White Market Chatter on Life Planning 101.
Y'all have a great week. Great weekend, guys.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.